This is the Friday, August 24th, 2018 version of the Market Plus segment. Joining us now is John Roach. John, welcome back.
Thanks, Delaney. Nice to be here.
John, let's talk a little bit about currencies, because you said you wanted to make sure we got that into discussion here for Market Plus. We saw the Brazilian currency drop, the Argentinian currency drop. What's that going to do for our soybean markets internationally?
Well, if you look around the world, a lot of the developing nations have had their currencies decline, but two of our major competitors, Brazil and Argentina. Brazil's down about a little over 15% for the year, and Argentina's down over 35% for the year. I think around 37 is the actual number. So if you think in terms of a farmer's position, as soon as I sell you my crop, I have to watch my money that you give me immediately start to deteriorate. And so that's the dilemma that they're facing. So until they're ready to purchase something that's tied to international currencies, most Argentine farmers will hang on to every bushel of corn or soybeans that they have, because as soon as they sell it, the money starts to deteriorate. And the situation is similar in Brazil. Although we've had very low prices here in America this summer, Brazilians had very high prices because of the currency difference. So what's happening here in the marketplace because of currency is that we're continuing to give incentive to South American producers to increase their acres.
So how about when we factor in the Chinese tariff demand, because they of course are not going to come to the U.S. for a large soybean purchase, but if Brazil and Argentina don't want to sell them their soybeans, what's going to happen then? Where's China going to turn? Well,
what they do is they bid the price up, and they bid the price up until farmers are willing to sell. And as farmers in this country know, about every month or so you need to generate some cash to be able to take care of just ongoing bills. And then as you're coming into your planting season, like right now in South America, just beginning your planting season, you have all your input costs that you have to take care of. And so the process moves grain out of hand. But when the currencies are doing what they're doing, you slow that movement as much as farmers can, and you also, with increasing the price levels in their currency, you increase the land production. Bean acreage this upcoming year, they're expecting a 3% increase in acreage, whereas just a few months ago, they thought the acreage was going to stay unchanged. So it's causing a change as time goes along. The Chinese will eventually be finished buying in Brazil because they won't have anything more to sell, and then they'll come to this country to buy and dwindle their stocks as far as they can and do as much substitution as they can, but eventually they will come and they'll buy some of our soybeans yet before year end.
Okay, before year end is what you're looking for. All right.
Most people think in September.
Okay, September is a month to be watching then. John, let's take a couple social media questions. We had some great ones come in this week. Starting off the top here with Lexi in Iowa. She said, with the results from the pro-farmer crop tour being so similar to the USDA August yield estimates, are the markets now a technical game?
Lexi, that's a great question. They actually have been a technical game all summer long. The way to understand this is to watch the Commitment of Traders report. It comes out every Friday afternoon, and it shows traders' activity through the prior Tuesday. So the report came out today, and it showed traders' activity up through Tuesday. And what's interesting, when you watch the movement of prices over time, you'll see that the big price moves occur when the spec funds move their positions, when they move from being big net shorts as they were last winter to big net longs as they were in the middle of the summer, and now in the process of moving back into being net shorts today. And so that process, technical process, is extremely important, particularly when you understand that these spec funds traditionally try to follow the trend. The trend is your friend. And so when you watch the market and you see, as in wheat as an example, we rolled down through the 20-day moving average, technical performance, picks up technical selling, and then you look over to see, well, how many positions do they hold? And it's, holy cow, it's almost a record long position in wheat, and the market's trending against them. You can expect them to be pretty aggressive sellers until the trend changes. So excellent question. Excellent.
All right, and that leads me into my next question, John, talking about the wheat markets. Kylo in Kansas would like to know, is the wheat rally over?
Yes, the wheat rally is over. It's almost a month over now. We peaked in August, early part of August. We expect a valley to be made here as these specs are getting out of those net long positions. They'll put the bottom in the market, and it's likely to come sometime here in this next 30-day period.
What are you looking for a bottom price-wise?
I think we'll be back down challenging the lows, getting close to those lows again. I hope we don't, but I'm afraid we will be.
Okay. John, let's take another social media question here. Matthew in Nebraska, a little lengthy one here, so bear with me for a second. With the large crop expected and a 30-cent carry from December of 18 to December of 19, as well as a 45-cent carry from soybeans December of 18 to December of 19, why don't we hear much about contracting in 2019? Or are there too many unknowns, I guess, is the second part to that?
I think that's an excellent question, too. I mean, I think you should always be looking at opportunities to contract the year-out crop at levels that make good profits on the farm. And for just a moment, let me assume something. I'm assuming that this is maybe a younger grower that we're talking to here, or is asking the question, who maybe has a little more leverage than maybe some of the other listeners have. So let me put you in the position of a younger grower that needs to make sure they have money to pay the bills when they come due. Selling next year's crop is always a good idea when it makes sense on the P&L statement. We don't like to get too heavy because our season for making the sales, we believe, is March to July. We think those months are our best months. That's when we'd like to sell most. But if you want to get started at these price levels, I think that's fine as long as it works on the farm. And quite frankly, we already started selling some 19 crop back when the markets were higher at the early part of August. So he's doing exactly the right thing.
John, I'm going to counter that by asking how much of the crop would you be contracting ahead for 2019? 10%, 20%? What's your end game?
10 to 20% right now. I'd be willing to have half of it sold by the 4th of July. And so space it out. We use sell signals. We should have between now and July, we should have 4, 5, 6, maybe 6 of them. And so you can concentrate on making some sales on each one of those sell signals, and that way you get an average of the price peaks. That's what we tried to do.
Okay. John, let's take another social media question. We've got great ones coming in. Phil in Dresden, Ontario at Agrodome on Twitter. December 2019 corn futures now stand at $3.94. Cents down from the recent high of $4.10 on August 10th. So let's assume for a moment that December of 2019 corn futures drift back up to $4.10. Does this mean that we can expect 10 million less soybean acres planted in the U.S. next year?
Wow, 10 million would be a really big swing.
Yes, it would.
I wouldn't expect 10 million swing, but I would certainly expect to see us move maybe 2, 3, 4 million acres away from beans over to corn. And maybe what he's really saying to us is that the way the P&L looks, they might move a lot more than that. And I would agree that farmers will move because they've planted a lot of beans in the rotation. We need to get back into a rotation on some of these farms. So I would expect bean acres to come down this upcoming year and corn acres to go up. And maybe the thing here we're learning is that there may be more of that occurs. And one of the things I do want to say, we talked to one grower who's worried about getting sales made and bringing home profits on the farm. Okay, and then we're talking with another grower who's saying, okay, how high can we go on 2019? And let me suggest to you that 2019 is going to be a better year than 2018, particularly in the case of corn. Depending on what happens, we may actually even have a better market in beans if all of our trade issues and stuff can all get resolved here. So don't rush out in the midst of all this negative news and sell because you're saying, oh, John Roach said I ought to be selling. No. What I'm saying is if you've got good profits and you're needing to make some sales and guarantee, et cetera, that's okay, fine. But if you're asking my forecast is prices will be higher in the winter than what they are now. And so rushing out to make sales right now for the 19 crop, I wouldn't rush at all. I'd walk very slowly, dribble a little. And as far as by the time I get into March, April, May, and June, okay, now we'll be selling heavy.
Okay. I like that answer, John. Let's take another question here from Flatland Mafia. What has rail freight bids been doing? Have they been going up or down? And have any soybeans been moving west on the PNW yet?
I'm stumped on both of them. I don't pay much attention to rail freight on a day-to-day basis, and so I don't know. And I don't know if I'm embarrassed to tell you, I don't know either one of those answers. So
no worries, John. All right, let's take another one.
We should have checked that question out before.
We should have. That's on me, John. That's on me. Let's take another one here. Talking about metals, Brian in Marseille, Illinois. Metals have been hammered. What has happened to the dynamics of the market to see them recover? What has to happen to the market dynamics?
Okay, once again, let's go back and talk about what's driving the market. And I think the gold market is also being driven by the technical situations that are going on, the relationships with currency and the trade war and all. Those are all they're fundamental stuff, but they're more technical in nature. And gold was up $29 this week. It was up $20 today. We broke up through the 20-day moving average for the first time in several weeks. So the trend just turned from being a sliding downward trend, it just turned into an uptrend. We're one day into an uptrend. And so if you want to be bullish on gold, buy it now and put your stops down underneath here. If the uptrend stops, then you get blown out. Otherwise, you're into the trend because we should move into some inflationary times here. And so maybe that's what the gold is signaling. I don't know. 1 week, that's not a trend make, so it's hard to say that. But I would be on the side of owning gold with stops underneath recent lows because we're in a turn.
All right. John Roach, thank you so much for your insight today.
Thanks, Delaney. Appreciate it.
Join us again next week when we pull artifacts out of the nation's attic for a look at 100 years of the tractor, and Sean Hackett will sit across from me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.